Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, July 27th. It is 6:15 as I'm starting the video. For new viewers, please watch the video at 1.25x. It'll really increase your efficiency, and I don't think you'll miss a beat. So let's dive in. Taking a quick look at futures. Large caps down 0.3. NASDAQ is holding its own, pretty much flat. Small caps are down 0.7. Copper's down 0.5. Oil is pretty much flat, and gold has not been doing much for a while. I did not think it was possible, but with our mega cap earnings tonight and with Jay Powell in the tomorrow at 2 o'clock, I thought the week was kind of set as far as what we are looking at. But this China thing has really started to turn into a real doom loop over there. And what we've got to guard against, at least be aware of, is potential contagion over here. And contagion has bearish connotations, but it could end up being a positive, and I'm not sure which way it's going to break. But I've got a whole rack of slides to kind of show you what's going on over there. And because of that, I'm going to split up, do a departure from my normal routine, which would be to go through our indexes and then FATMAAN trade with the earnings tonight. But what I'm going to do is break it up. I'm going to go through this China thing. I'm going to cover the indexes. Then as soon as I wrap up, I am going to do a separate video on the FATMAAN names that are reporting this week, and then give you a preview of that because they all report after the bell, and that'll kind of give you a flavor or set the table for where we're at on those market leading names. So just taking a look at earnings here today, I think there's some nice marquee names that are going to be important to what we've been watching here over the last couple of weeks. We've got UPS, we've got GE, 3M, Raytheon, JetBlue, and we got a home builder down here, Pulte. But these are in the industrial sector. Actually, these are defense is under industrials as well. And we've been watching for this cyclical rotation to see if that emerges. And if all these earnings announcements are reacted to positively, we'll probably see a bump in XLI, and we are close to triggering a breakout on XLI. So I want to watch that real carefully. And of course, after the bell, we've got Apple, AMD, Microsoft, Alphabet, Visa, and we've actually got a bubble name here, Teladoc, that I want to watch. I'm not a big trader of Teladoc, but it's in that bubble basket that I want to keep an eye on. That's an ARC name, I believe. And then we got Starbucks and consumer discretionary that I think is worth a look. And then we got this QuantumScape in the green transformation space, another bubble stock. No, I'm not even sure if they have anything to sell at this point as far as batteries go, but they certainly have big dreams, big plans, but short on profits, short on sales, and that's what the bubble stocks are all about. So I want to see how earnings treats a name like that. So on the macro front today, we've got durable goods, which is going to be a good read on the real economy. We've got the Richmond Fed, and of course the FOMC starts their meeting. We have a 5-year bond auction, I think at 1 o'clock. And then tomorrow, of course, we'll have the reaction, the reaction to all the earnings of Apple and the rest of the gang. And then we've got the Fed announcement at 2 p.m. and then the Jay Powell presser at 2:30. But let's get into this China risk doom loop. Over the weekend, in the Weekend Profit Navigator, we threw out there a hypothesis that if you were a professional money manager and you've got all this exposure, or a balanced portfolio, but I mean real money in Alibaba and Baidu and Tencent and JD and these education names and Didi. Didi is a recent IPO. You've been getting squeezed on this China crackdown big time. And the way this works is you can tolerate a drawdown until you can't. And I think we've crossed that Rubicon with professional money, that being long at this point China names has become untenable. It's indefensible. It's unexplainable. So when it comes time to report your quarterly numbers to your clients, to your institutional clients and big wealth clients, how could you possibly explain that? I'm just gonna stay long these China names because the valuation is compelling. I don't think that's going to cut it. And I think what you're seeing now is a wholesale liquidation of all things China. And I think these professional money managers have made the decision. It's career risk. What you're doing is saying my career is worth more to me than being long Baba, and then having to try to explain why I sat through this rug pull. And the thing is, there's no visibility. We have no idea what Chairman Xi's master plan is. Maybe the master plan is to inflict as much pain on Western financial institutions as possible, just to let everybody know who the boss is. I mean, this whole thing started with Ant Financial back in October, November of 20. And Jack Ma was, Ant Financial was going to dominate the world. And then Jack Ma opened his mouth and got on the wrong side of the right people. And so they killed that. And then it has rolled from there. And I think this Didi thing was the last straw. They were told, don't list on the NYSE. We really don't want you to list on the NYSE. They did it anyways. And 2 days after, that they raised $4 billion, the hammer dropped, and they haven't looked back since. It's broadened in scope. These for-profit education companies were notified that they're not for profit now. And I was looking at something that the top 10 holders of all those names, TAL, EDU, GoTo, they're all North American. There are no Chinese top holders in those names. So, okay, we destroy wealth. It's not our wealth, it's their wealth. So that's fine. We can assert control. The pain won't be felt here locally. We can deal with these, handful of companies. But now it's spreading out to, food delivery companies and property companies and all walks of parts of the Chinese financial infrastructure. And really, God knows where it stops. But the thing for us is, we talked about being long China is now toxic. I don't think it matters what the valuations are. I think the dust has got to settle for a number of months before the all clear comes back in. And if you remember, if you've been around markets for a while, there was a period between 2014 and 2016 where you traders would always wait till 9:30 at night to watch the China Open, because literally it was going up or down 7% a night. And if it was down 7%, you knew you were going to be down the next day. If it was up 7%, you breathed a sigh of relief and you knew that you were probably going to have a good day in markets. And that correlation has backed off over recent years, but it can happen. And the market now is even bigger than it was back then. So what I'm saying is, don't discount the possibility that this thing could roll across financial markets just like the pandemic did. And I'm not trying to fearmonger. I'm just trying to say fear spreads. And whether it's the COVID fear or the financial fear, a risk-on environment can turn to risk-off in a heartbeat. So I want to be aware of that. This news company, Marketeer, put together a really nice pack of slides that summarizes the China situation that I have lifted. So credit goes to them, but I want to show you their slides. Look at the correlation between large cap futures in purple and the A100 top 50 names in China. Look at the disconnect. Look at the divergence. Look at the gigantic jaws that have opened here between the two markets. And whenever you see the jaws like that, how are the jaws going to close? Because they will close. Do U.S. futures catch down? Or do China markets stabilize and then catch up? Or do they meet in the middle? Do these come up some and these come down some to reestablish a long-standing, pretty tight relationship between the two? We got to watch out for that. And given what we've already talked about with the tech weighting of these FATMAAN names, 25% of SPY and 40% of the Qs are these big cap names. If they are sold tonight after the bell and continue to be sold, that's going to go a long way towards bringing U.S. large cap futures down. That's not a prediction, that's math. If they hold the line or buy them up, they go higher. So let's watch that relationship. Same thing with the DAX. Big jaws have opened up, which were previously pretty tight correlations between China equities and DAX equities. Don't forget, China is Germany's largest trading partner. So if turmoil grows in China and it starts affecting German exports, it's going to roll into the DAX. And if you know anything about anything, you know that there is a very tight correlation between the DAX and SPY. They track like nobody's business. In fact, you can look up every morning, and it's not even a bad idea to do this, see what the DAX is doing. As soon as you wake up in the morning, is the DAX green or is it red? And if it's nicely green, or if it's sold off a lot, that's pretty much what's going to happen in the New York session. So there's a scenario where this China thing could hit Germany first, right? That's kind of how the pandemic spread. It hit Europe before it hit our shores. So it hits Germany first, whacks them, and then the correlation between the DAX and the SPY rolls through. So we gotta, it may be a good idea to watch the DAX, even if you don't trade it, even if you don't, really know what it's the SPY of Germany, right? It's the leading companies. So watch the DAX because there's a very tight correlation between the DAX and U.S. large caps. What is this thing going to do to the yuan? The yuan had been strengthening, but now are they going to have to go through some kind of deval scenario with their currency to get this thing under control? And you can see here we've got kind of like a double bottom here, and now when DAX goes higher, that means the value's going down. So just remember that correlation, and they've let it strengthen a lot over the last year. And so you start seeing the China yuan devaluate. That's going to have an effect on markets. And here they've got a slide where the jaws have opened, right, between the yuan and the financial institutions here. And are these jaws gonna need to catch down towards this red line? And you've seen that during this period here, in white, the yuan was weakening, being devalued. And over the past few years, they've let it strengthen. Or excuse me, this was strengthening. This is weakening, and then this recent burst was strengthening. And so now, and you can see the correlation between these reserve requirements in red and white, the value of the yuan. So now, in order to get this back in the line, you'd expect the yuan to weaken and come back down in here. And then that would equate to a devaluation of the yuan. So something to watch. And they've got a slide here showing the relationship between SPY and the yuan. Pretty darn tight correlation. Going back in time, they track one another, but now we've got the divergence. We've got the divergence between SPY and the yuan. Another, alligator jaw opening. Which way is this going to close? Do we catch down, or does the yuan need to catch up? And that means being devalued. So, all these global markets are interconnected. And so you see when things happen in China, they're seen here. And since all these global markets are connected, it doesn't matter until it does. So let's keep an eye on the yuan. I know it's not something we talk about every day, but we're going to see it in markets one way or another. So we need to see how this thing resolves. And I'm not going to read this to you, but go to the website, pull up this little summary that the Marketeer has put together, and read through that, and that'll give you some good color on the situation. And here's the final slide that I find absolutely amazing, and it's a lot like our markets in a certain respect. China margin trading debt is at all-time highs, or at least the highs of this cycle, while the market starts to break down. So when do the margin calls start? When do the margin calls start? I mean, I can't imagine, if this thing drops any further, that you're not going to see liquidations being forced on all these people with trading margin debt. I mean, that's what happens here. You get a rug pull, and then you get the margin calls soon afterwards. So, and then that in itself creates its own doom loop, because people are forced sellers. And forced selling begets more forced selling. So this ramp in margin debt, I would expect, will need to get unwound if this thing continues to the downside. It's just, it can't go on like this with margin debt at the highs, with the equities heading lower. That'll have to be unwound, and then that will force even lower and lower prices. So kind of a important spot here. Now yesterday we saw some early signs of a regime shift towards the cyclicals. We had a monster move in copper, up 4%, closed the day on the highs. We saw nice moves in Freeport and Southern Copper in the copper ETFs. We also saw a nice move in steel. That was something that we looked at over the weekend with a breakout in SLX, the tracking ETF for steel. Saw nice moves in Rio and BHP and Cliffs and all the steel names. Now, and also we had a nice move in energy, but we did not see that in IWM, and we didn't get the breakouts in these key ETFs that I've been looking for. And you know what I said, I would love to get in Freeport. I would love to be in copper, but I'm going to hold off until Powell. That's just the defensive trader in me. If you got long those names, set your stop, and if they reverse it, then they reverse it and you get stopped out with a paper cut. But I decided to hold off. I've been, there's been a lot of head fakes. I mean, that copper breakout looks for real. I mean, that's a monster move, and I'd like to think that one is for real. But if cyclicals are going to go, they're all going to go. There's not going to be like a copper runaway and everything else is in the weeds. And don't forget that China is the biggest consumer of commodities on the planet. So if there's an emerging problem there, it may dampen that cyclical impulse on the commodities. So I want to get some confirmation here. I want to see something close to a global cyclical breakout, and then get on the bandwagon. That first, you go back to Jesse Livermore. The first eighth and the last eighth are your most expensive eighths. That means, trying to be the first in or the last out is expensive. You usually can't time it that well. And so what I want to do is make as sure as I can that rates are rising, that all these ETFs are breaking out, and I think we'll have plenty of time to make a ton of money. So let's look at SPY. Continue to drive to new highs here on the 2-hour. I think we've got a support level at 440. I think you can stay long against 440. We've broken out of this rising channel. Where you want to start getting concerned is a break back below into the channel. Then you're looking at 438, and then possibly a run to fill this gap and this midpoint down here at 436. So keep your eyes peeled on 440 today. As long as we can hold that, I think, well, nothing bad can happen above 440. Let's call it what it is. 30-minute chart, same thing, just an exploded view. The pivots line up well with the 2-hour chart. That's not always the case. But here, I think just stay long above 440. I think you've got another level here at 439 that is pretty, substantial. But you drop below 439, you got kind of an air pocket here, and I think you would come into 438 and 437 rather quickly if things start sliding to the downside. So I would key off of 440 and 439 for today. Qs. Not much of a day yesterday, really. I think it was mostly flatline. I've got a support level here at around 367, 367.50. We'll see better detail on the 30-minute chart. But we're above all the moving averages. I've got a little reference line up here. I think one of two things is going to happen today. Well, three. China contagion puts a damper on the day's session, and we, kind of just go into suspended animation mode. Or we get some FOMO activity in the names that report tonight. The Apple's, AMD, Microsoft, Google. Hopefully get a ramp in that, because I'm long AMD, I'm long Apple, I'm long the Qs, and those didn't work yesterday. So I lost money on all those trades yesterday, but I decided to hold overnight. We'll see how it goes here this morning. If I see some positive travel in the morning session, I'll hold on. If they just look like they're bleeding out, then I'll just, close them and say I tried. That's about all you can do. Or that's about all I can do. Right here, I think your pivot point, it's 368.50. As long as we can stay above that, I think we got room for higher prices. If I were to go to the trouble, you could see where I could draw this as another bull flag. Here's your flagpole. Here's your consolidation. You get a break above the flagpole, you're off to the races to the next one. We'll have to see today, does that breakout occur before earnings with some FOMO activity, or does it just kind of flatline or drift lower, waiting for those names to report? IWM, this is our cyclical watch, came right up here to my 222.50 and got rejected. And so that further validates that line as an important level on IWM. Now, there was some good trading. Let's look at it. Well, let's just conclude by saying this is my go, no-go line for IWM, for swing trading, for duration trade. Breakout above 222.50 and then get through the 50, a dollar higher at 223.50. And then after that, I think you got a good chance to get a $10 move if cyclicals take off all at once. So now let's look at the 30-minute chart. And here's what I was talking about. We had a run right up to this 222 level, which capped the advance just the other day. And then that's for active traders. That was a great short entry point, because you knew that level was important. And when you saw 3 or 4 bars, an hour and a half's worth of trading not be able to get through, that certainly was an objective short. And you got a $3 move back down into 219. So that was a nice active trade. And that is the power of these levels, that if you know the levels, and you see the prior resistance, that's where you focus on your execution. And if you're new to the channel, it may take you a while, but I want you to develop some trust in my levels. I think I'm pretty darn close, pretty darn often. And then you can, focus all your energy not on, do I have the right level, but is this where I want to enter? And where do I want to put my stop? And that kind of thing, because execution is where you make your money. The lines are how you set up your trade. And so I want you to be able to use my levels for guidance when you set up the trade. So I'm going to wrap up the video here and thank new time visitors to the channel. If you like the analysis, hit the subscribe button and the alarm bell, and then do yourself an extra favor. Jump over to the show notes and register for all my content. You'll see a link there that takes you to the blog site. All it is asking you for your email address. It takes 5 seconds. That way you officially join the group and you get the benefit of getting all my intraday notes, observations, trade ideas right to your email box. And a lot of that stuff never makes it to social media. So if you're locked in with the group, then you'll get all that information. I can't do a video for every single idea that I have. Maybe I'll get to that point one day, but not yet. So please register. It'd be great to have you. And then if you want to join our trading room, you're more than welcome to do that. I'll send you an invitation to do that. So, longtime listeners, thank you so much for your support. Leave me a nice comment. Hit the like button. It helps in my YouTube searches. We're growing the channel nicely. I want to keep this positive momentum, and I really appreciate your help in my efforts. So, look forward to the Fat Man pre-earnings video that I'm going to start here as soon as I get this one out to you. Then look for that. Hopefully I'll get that done before the bell. This has been Chris Buss with Traders Profit Compass. Talk to you next time.